Okay, so what we're going to do now is try and sort of prepare, first of all, the cash flow from operations. That's the first bit that we need to work on. And I mean, really, what I'm going to try and do at the same time is sort of, I think you need to be aware of what needs to go through the cash flow from operations, first of all, and sort of think, okay, I know what I'm looking for, and but I'm going to sort of do it as well as doing the double entry. But you know that, okay, I need to be looking at my profit from operations, first of all. So that's what you're sort of looking for. But what you typically get is this type of picture where you need to kind of work backwards to get you. I just need to arrive at my profit from operations. So typically we start from profit before tax. I don't think it would have mattered if you started with profit after tax. All you'd be doing is saying 359. I just need to start from profit from operations. So I'm just going to go back here and create a screen. So I'm trying to get cash flow. So I'm going to start with, okay, profit. I'm just going to start with profit for the year. Again, like I say, it doesn't really matter because you see, my starting point is profit from operations. So I'll start with 359, and then the first thing I'm going to do, of course, here is that add back taxation. I'm working backwards, aren't I? So I'm going to add back taxation. Add taxation. And here I have 177, right? And then if you like, when you add these two together, you're literally at profit before tax. I mean, I'm not doing anything special here. And then all I do is I add this again, this 47. I'm just trying to get to, again, like my profit from operations. So I get here, add the 47 to 536. And the reason I'm doing this is because it's just the layout, really. I'm not ignoring these two, but what we do with these two is after we've found cash flow from operations, we then deduct tax paid and finance costs paid. Then we have net cash flow from operations. So it's important to just arrive first of all at cash flow or profit from operations. Profit from operations. I'm just laying mine out like this. As long as you know what you're doing really in your appendix, it's fine. So really it's this thing here plus this plus this, and you should have your cash flow from operations at 583, which is that. So the question, some people say, oh, why don't I just lift this figure up? The layout wants you to kind of work backwards to recognize that these are accrued amounts, and then what you're doing then is now starting off, if you like, arriving at profit from operations and then reconciling. So and again, like I say, I'm going to try and sort of do it as I'm going along. So we know, I'm going to start at the top. We know that the issues here that have affected this are the non-cash movements, the things that we're trying to reconcile profit to cash. That's important, right? It's not a trick. It's saying, if I didn't have these non-cash movements, my profit would be equal to my cash. But I have these non-cash movements, if you like. And is that imbalance between the things? So depreciation, we don't even have any depreciation in the cash book in the bank, so the whole whack. So we start off with depreciation, and that's, again, like I remember my first videos, that's the first thing. But what I'm also going to do is I'm also going to be just doing it at the same time. So I'm just going to sort of here I'm going to add back depreciation, but what I'm going to do at the same time is I'm going to come here and sort of deal with it. I think what you should be trying to do at the same time is putting your double entry as well, because you know, right, that your depreciation was going to, because you see, ultimately I need to find the cash flow from PPE in terms of for cash flow from investing. So you're thinking kind of double edged, right? You're thinking, okay, there's a point to this here. I've got that 366 there. And that's not the only thing. I mean, again, like I say, it's being aware of all the things. You need to know what's happening in your cash flow for from operations, what should go in there. Then I have my impairment of intangible. Well, I know, right, that this is a we've agreed that, listen, you have this hit that's affected your income statement, but we don't see it at all in the cash flow in the bank. So I'm going to be adding this 36 as well. So that's my intangible. And what I'm going to do here again as well is I'm going to have here impairment. Just so you know, That's sort of because you did buy some more, but it's important to put it in there first of all. And then I have here add back. So oops, sorry, add depreciation, add impairment. No problem. I will. This is the key question I'm doing, so don't just bear with us. So depreciation was 366, and impairment was 36. Impairment was 36. Impairment was 36. Okay, great. And then, so these other costs, these would happen in the income statement as well. If the only way we would know there was a difference or there's an issue is if we had some liability, if there was some amount that hadn't been paid, if you like some sort of difference. But otherwise, this is normal. Here, if you like, we have a government grant situation. So what we see here, I think it's important to understand what's happening here. You see this other operating income. I explained to you that what you do is you would have had a grant and you would have released some of that deferred income into your income statement. You can see it says other operating income. So here we have this other income, if you like, coming through. It's not actual cash. It's just this release of the deferred income coming into the cash book. So there will be a difference as a result of this 50. So here I have here the release of this 50. So I need to, if you like, deduct that government grant. It's almost like amortizing. It's like a government grant amortization, because it's like releasing, isn't it? I'll just leave that there, and I'll just do hopefully that allows a negative, right? So you can see that, right? And what I will do, of course, again, like I say here, is to go to that government grant sheet and here put the release of 50, because that's what happened, right? You release that to the income statement. Really important to make sure you're going along, because ultimately I need to know if we received any cash, or what cash we received in the year, to put under cash flow from investing. Really important there. Right. Now, yeah, so I'll come over here and then let me deal with so I mean, there are other things, but let's just deal with the other things. So here I've dealt with the government grant, distribution costs, admin costs as normal, nothing fancy, unless I see some sort of distribution costs accrual or something along those lines, or administration, if you like, accrual, so to speak. Right. So let's look at my provision. The interesting thing about provision is that it's not the provision itself per se, it's the change, if you like, of the increase in that provision, if you like. So what I have here is you've put through a provision of 67, no problem. Now I'm interested in the non-cash movement, So that's my provision of 67. So let's just go here. I'm just going to come here, first of all, to my provision of my environmental provision of 67. Here we are. I'm going to put here provision in the year. Provision 67. That's the first thing. But I think what's important is because I need to start looking at the notes. So you need to sort of look at I've already reviewed the notes. I already know what issues I need to think about, and I'll come back to them. But here I have this environmental provision here, and it tells me that the provision represents an estimate of environmental improvements in the year. And then what I observe is that when I look carefully at when I come back here and I look at this, I see that, so what must have happened in terms of this provision here was that, I'm just going to top this up here, of course, this here, oops, sorry, just do this. I have 91 here, so of course I'm also going to put 91 here as well. So it means that what you must have done is, if you released part of that provision of 15, because you've put through, if you like, a provision of 67, but then also you must have released, if you like, 15 as well. So because you see you have a balance here of a closing balance of here. If it was a straight provision, if it was a straight increase, you would have, it would just be the full provision. But what we see is that actually, no, we don't have a full provision going through, because otherwise this would balance, right? If you just put through a full provision, then you could argue that the whole thing hit your, if you like, your income statement, but nothing touched your cash book. But we don't see that here. We actually see that we have a difference here, if you like, of 15. So we must have actually reduced that provision by 15 via either some release of sorts. So therefore, the movement, the non-cash element, the real non-movement, the real element that hits our income statement is not the full 67, but it's the 67 minus the 15. So that's what actually hits our that's the adjustment we need to make for the provision. Again, yeah. So we have we need to add back 67 minus 15. And that's how we get that, right? And I'll just put it here as well, 67 minus 15. And I'll explain it a bit more when I come to the answers. But the point you can see here is that unlike depreciation, which is a provision, really, you have the full thing. There is nothing offsetting it. I'm only interested in the actual non-cash element. I haven't had the full cash element, the full 67 hit us, because I can see the closing balance is different. These are provisions, just like depreciation. Okay, right. Now, I'm just going to go to the I also know that I should see a couple of things. I need to look at the assets and see whether was there any gain or loss on the non-current assets. And when I look here, let's look at the information here with the non-current assets. You're just filling things out as you're going along. It says, first of all, with our I need to see if there's any gain. And I can see it here, but I'm going to do it all at once. So tangible non-current assets. It says here that this included some land, giving a surplus of 170 during the period. So I'm just going to go in there, and I'm going to go to land. And where is my land here? My land is here of... yes, here we are. So it says I had some reval during the year of land of 170. Right, because I'm trying to find out a number of things. I want to know what the cash flow from investing activities, but also any gains or losses on the sale of assets, because that's allowed. That's an adjustment in the income statement. The company's motor vehicle was replaced during the year. The fleet originally cost 42, had a written down value of 11. So we got rid of this fleet, and so we disposed of, if you like, we disposed of the fleet. Disposal 11. Then it says that we received 14 in the bank for it. So I'm just going to create a disposal account. What happened was, when you disposed, right, you would have said disposal. You'd have disposed 11 here, and you'd have put 11 here, and then you'd have sold it for 14, therefore making a gain of 3. And that gain would have gone in your income statement, right? You'd have had a gain on sale in your income statement of 3. But this 3, again, has to be, because I'm reconciling, I need to deduct this 3, deduct gain on sale of 3, if you like, from my profits to get to my cash. I'm just reconciling. Remember, I'm reconciling profit to cash by all these sort of non-cash events, right? And then I now have so let me just chop that up. Let me just deal with that. So I have here disposal. Let me finish off the story on non-current assets. So it says the gross assets were replaced by this for 180 million. That's fine. I mean, I could treat this 180 million, or I could just wait. That's fine. The company acquired some new plant at a cost of 120 million. So we acquired some new plant for 120. They tell us very clearly. So I have new plant here, 120. 120 by a loan, and I think we've already recognized that loan, I believe. In here somewhere there is a loan for 120. Here it is. So we acquired, I think it tells us we acquired and yes, so an arrangement was made. Well, we will see that, you see, because it says that an arrangement was made for the liability to be settled, um, if you like, and the value by which the loan notes exceed the liability. So if you notice here carefully that actually what happened was you received 200, we'll come to this, but you received 200. So you received more than the actual, so that's covered, but we'll leave that for now. We know that that's money coming in via the loan, and we can deal with that when we talk about the loan. But in terms of the PPE, we know that's what happened. You got some new plant for 120. And then, yeah, I think that's pretty much it, really, because now we can actually kind of close out here. You started off with this, you had a revaluation of this, you bought some new plant, you had depreciation of this, you disposed of this. So the question, really, the balance, the full balance of what it is that what you have spent, therefore, must be 2480. Yeah, I'm just going to do this here and just do equal to 2480 plus 366 plus 11. You have here 2587, and I'm just going to do the same thing here, 2857 here, and therefore it means that we must have had additions in the year of, let's see what the difference is. So that's 2857 minus 1830 minus 170 minus 120 is 120. Let's just do that again. 2857 minus 1830 minus 170 minus 120 is equal to 737. Just want to make sure I'm not missing anything there. Let me just quickly check to see that I've got everything. I believe I have everything in there. Yes, we have the revaluation. We have the... Oh, of course, sorry, that was a trade-in. That was part of the trade-in here. We had the trade-in. So remember, we didn't dispose of it for cash. It was a part exchange. So we had a trade-in. So that was 14. So it was part exchange. Yeah. So really, the additions would be this amount minus this, the whole batch, the whole thing there. So 723. So your full additions, including that 100, this is why I said I waited, including that information. Yes, they told us you bought the gross cost of the fleet was 180. Including this 180, you have here all of that was bought in during the year for cash of 723. And so I've got this figure now. Okay, great. So the key figures that I was interested really for my profit or loss was the 600 was the 3. My gain here, when I come back here, was the 3. Deduct that gain on sale. So I think let me just look at what else we have to deal with here. Yeah, these will all get done with once I've found my cash flow from operations. So I'll leave what happens with the finance costs for now. The last things I need to look at, of course, are the working capital issues. So I'm just going to call these working capital. Just give a small heading. You don't have to, but I'm just going to, so that we're very aware. And I'm just going to put that here. Change in trade receivables, change in trade payables, and change in inventory. That's it. That's what I'm going to do. So I'm going to have these changes, and let's just look carefully at what happens here. So we see here that in terms of inventory goes up from 763 to 920. So if I was using my double entry, you don't have to. I was just showing you that if I was using my double entry for inventory, the fact that inventory goes up technically you could argue that I bought some more inventory. So 920 is the closing difference here. So 920 is the closing difference here. You can argue, therefore, that the difference, of course, here is 920 minus 763, 157. So you have 157 of cash going out. So we have a deduction. We have a deduction of 157. You have that. Okay, great. Then let's look at trade payables. Well, that's what I have next. There's no order really. Trade payables, it goes from 518 to 680. So if I have trade payables of 518, trade payables, where are you? Trade payables. Yes, let's see where you are. Trade payables. Here we are. It's gone from 518 to 680. So it means for this to be, it means that, I mean, this is the closing balance here, isn't it? 680 here. So it means this is also 680. So it means that something must have come in, some money must have come in, if you like, of the difference here. So we have 680 minus 518, which is 162. So we have 162 coming in, if you like, right? So debit, bank, credit, if you like, that figure. So we have 162 coming in. So that means that money comes in. So what am I going to do here? I'm going to have change in here. I'm going to have 162 coming in. Oh, sorry, this was my trade change in inventory. So my change in trade receivables, when I look at that, change in trade receivables, here I see a movement of receivables 472 to 642 coming down here. Trade receivables 472 to 642. So it means that, I mean, again, a bit like my trade receivables. So this is my closing, a bit like my inventory, 642. 642. If you watch the other videos, I show you the real theory of what's happening, but you can just simply argue that what you have here is money going out, which is the difference, which is the 642 minus 472, and it's 170. So you have a payment technically of 170 going out of the bank, and so you have money going out of 170. It's not actual money, remember. It's just, we're just adjusting, we're reconciling. So we have 170 if you like, as well. So these should be all the events that happen through this period. And so what I really should do is I really should just from here do this. And I'm going to check the answers, of course. Let me just see if I do this and I do sum. Let's see what it gives me. It gives me 819. Most of the time it's always off. But as I said, I'm doing this live, and then I'll check the answers to see and correct my answers to theirs. So this is here. Oh, brilliant! It's 819. So you can see that's the 819 happening over there, and that's the key task. That's the first task. That's the 819 going on over there, and those are all the movements there. I don't know how long this video is now. So what I want to do very quickly in this video is very quickly talk about these next two things. From here we're done. It's just kind of straightforward. It's now double entry proper. Literally, it's literally sort of saying, listen, what's happening? What interest did you actually pay? So let's look at the picture for interest and tax actually paid. So look at the story here. It says that I'm just going to look under liabilities and look for interest. Accrued interest, you have nothing, and then you have 4 accruing. And so you have in your income statement, look at interest. Again, like I say, it's just literally double entry from now on. Here I have loan interest of 12. So what happened here was that you debited expense. It's literally double entry onwards. I mean, it's double entry all the way anyway. Where's the loan interest here? Accrued interest. So you went debit tax interest expense and credit accrued interest of 12. That's what you did. Right? 12. You have 12 here. This is income statement. Yes. So if your carried down figure is 4, it means what you must have done was that you must have paid 8. Yes, out of the bank. It's just what it is. And so, of course, this becomes 12 and this becomes 12. So I now know that when I come here, I can then say, yes, deduct finance cost. It's just, now you're just deducting as you're going along. Deduct finance paid. You see, and that finance is 8. You can see this is very different to what happened here when I was adding finance costs here of 47. Yeah, this must include a few others. Sorry, but my point is that I'm from here onwards, I'm actually deducting the actual finance cost. And let's look at tax as well. The same principle. I just need to go to the double entry and just plop in the number, literally. And so here I'm told, so I have my opening balances for, where's my tax here? Opening balances and closing balances. I just need to find out what was the tax expense for the year. Literally, that's it. So just go here to the tax expense for the year. Taxation is 177. They tell me. So literally I just go, well, that's it. Tax expense for the year, 177. So therefore, I'm just going to do all of this, add this here, do my addition, 392. So of course this is 392 as well. So the question here really means here is that if these are both 392, then the question here is, what tax did I pay in the year? Tax actually paid, and it must be the difference between, of course, this and this. So it must be this thing, tax paid must be equal to 392 minus 176 minus 52, and I have 164. So I must have paid tax of 164. 164. Yes, let me just check. I believe so. Let's just check I haven't checked again, like I said, I'm doing this live. There you are, 164. It's just what it is. And so I now deduct literally these two things. So this is the 819 minus the 8 minus the 164. And then you have your answer at 647. So this is your net cash flow from operations. So again, pick off the big ones, the good ones, the depreciation, impairment, deal with the government grant amortization. You'll always have that. The provision is the actual movement in provision. The only reason why this wasn't fully 67 was because I could tell from the T account that there was a movement. It wasn't a full-on adjustment. Something 15 was released in that period for whatever reason. I don't know. Maybe you paid off some of that provision for the year. I mean, looking at the information, I didn't pick up the provision and estimates. So maybe you pay. They don't tell me, but it feels that you paid off someone, or you paid off some environmental charge in the year, reducing the actual non-cash provision. And that's the important bit, right? Because I'm interested in the non-cash events. Okay, great stuff. So that was cash flow from operations. Probably, I don't know, I'll see how long this video was, probably 20 minutes. But you can see that's where the work is. The cash flow from operations is where the work is. And then the rest of it starts to sort of fall into place for the other two. Okay, see you in the next video.